But the one I'm going to talk about is the original CBILS. It's not a tax demand floating in the English Channel, with my very weak humour. It's the coronavirus business interruption loan scheme, and it's for the companies that are 45 million or less. So what's the idea behind it? Well, you can borrow, the business can borrow up to £5 million over 6 years. The government sort of step in and say, well, we'll pay 12 months interest and any setup fees the banks charge. And a lot of the providers are incorporating a 12-month capital repayment holiday. The idea is that the banks will have an 80% guarantee from the government. So 80% of the loan is guaranteed by the government, which means that businesses are responsible for sourcing the remaining 20%. But the point to note is that even though the government is responsible for sort of the guaranteeing the 80%, 100% liability still rests with the business itself. And the guarantee only kicks in if the business fails. Interestingly, it doesn't have to be just limited to loans. Okay, it does say loan in the title, but it can be an overdraft facility, an invoice finance, or asset finance. And do remember, it's not a grant. It's loan finance. It has to be paid back. This is a question I have been asked a few times, so I've just thought I'd make that clear now. A few other points I've got really to note about the scheme. Key really is that the lender has the authority to decide whether to offer you finance or not. So it's not compulsory. And we did have a question about that, which I'll come to in a sec. So it's up to the banks and their lending criteria. Under the scheme, lenders will not take personal guarantees, which is a major step forward, at least for facilities below 250,000. And even if the facility's over that, PGs might be applicable depending on the bank, but they can't, they have to exclude the principal private residence of the business owner. And any PG is capped at 20% of the outstanding balance of the CBILS facility. So imagine the situation if the business fails, you've got the remaining balance of the CBILS loan, less any assets that have contracted against it, and then it's 20% of that reduced balance that the business owner is potentially on the hook for. The eligibility for it, well, you've got to be UK based with your business activity. As I said, the annual turnover less than 45 mil. And this is a key one really, and I'm taking this text right from the British Business Bank website. Have a borrowing proposal which the lender would consider viable were it not for the current pandemic. So it is key that the bank has to think that it's a viable proposal. You've got to self-certify that you've been adversely affected by COVID-19 as well, but that shouldn't be too difficult really. So that brings me to one of the questions I had regarding landlords and the fact that they couldn't claim it. Well, it's probably because they're not a business. We've had a question that is a furnished holiday lets business, and in my view would sort of qualify. But if it's like a normal sort of buy-to-let rental arrangement, then it's not a business. So in my view, it wouldn't qualify. Some of the practical issues we're seeing, and this brings me to a question from Susie Titchener from Southwest Growth Service. Good afternoon, if you're watching, Susie. She's saying, well, are banks working to government guidelines or are they reverting to type? Well, it's probably a bit of each, but and if there are any kind of bankers on here, they'll kind of they'll say to the contrary, but they are really reverting to type to some degree. On this sort of CBI webinar that I was tuned into on Wednesday, and indeed in the one this morning that had the Business Secretary Alex Sharma on, Carolyn Fairburn was saying, well, there's been 28,000 applications, although Alex Sharma did say it was actually 28,000 inquiries, so that is quite potentially a key difference. But of 28,000, only 6,000 applications have been completed with funds drawn down. So that amounts to 1.1 billion. And remember the figure I said at the start, 330 billion of loan guarantees. So they barely scratched the surface with this. And I think what was happening anecdotally anyway, is that the banks were pushing their own products first. So the situation was, if you were a basket case of a company, you wouldn't get a loan anyway, even under the new the CBILS scheme. But if you were a good business, and I had a question about this as well, that's saying, well, we couldn't get a loan under the CBILS because we had property to act as security. But if you were a good business and the bank with good security, then the bank would just flog you one of their own products. Well, the good news there is that the government have intervened to say that actually, there's no need, no requirement for the banks to offer their own products first before being eligible for CBILS. So CBILS has come from being a last resort type of offering to very much a first resort offering. And it's the government's intention then that the bank should see it like that and offer it almost as a matter of course first up. The history of these kind of loans isn't great. I mean, the ancestor of the CBILS loan is the Enterprise Finance Guarantee Scheme, which had a very low take-up, and the banks weren't desperately keen on that. And I haven't known anybody who actually successfully did an application on one of those. The banks are also very busy. Obviously, they're operating with reduced staff, and although you can potentially go to one of 40 plus lenders that the British Business Bank are in partnership with, including Co-op and Starling, actually, these newer banks. What we're seeing, though, is that banks are not taking on new customers for these products. So it does leave the question that if you approach your bank and are refused for whatever reason, it does leave you stuck, quite frankly. There's also, I've come across an issue where certainly one of my clients only wanted a small amount, relatively small, say £40,000, and the bank was trying to offer them several £100,000. And you can see why, because with the paperwork and everything going into it, the bank would benefit from a higher facility. But very often, the businesses are just after a working capital kind of facility to tide them over. So the banks may think that they are uneconomic to process. And because of this, the loans can't always be done online, the applications. Certainly I was looking at the Barclays website, and you've got to phone the number and actually do it that way rather than just sort of tappity-tap online and there you go. You also have to consider your business case, including forecasts. I'm generally hearing it's 12 months, say from now, so you've got 6 months of coronavirus impact and then 6 months after that of sort of recovery. So you need to be able to kind of produce those sort of figures. So what would my advice be? Well, you should talk to your accountant anyway, whatever the economic situation out there, but especially now, I can't stress that more. So talk to your bank and your accountant, and the three of you come together to work out, well, how much do you require? For what purpose do you require? For example, one of my clients is a chocolate manufacturer. He's probably my favorite client, to be fair. And he wants finance so in August, September, so he can really kind of ramp up for Christmas. So that's what he wants. But also work out, thirdly, how long you need it for. And bear in mind, it is finance, it has to be repaid. Then you can sort of get together your financial information to work out your business case and make it easy for the bank to say yes. So get your forecast, 12 months forecasts, cash flows, management accounts, this sort of thing. And the banks will appreciate that it's difficult at the moment to arrive at accurate forecasts because of the unknown. But the more work you do now, the more chance you have of the bank saying yes. Anecdotally, actually, my colleague Alison Watts, who directs our corporate finance department, she's informed me that one of the banks she's spoken to has said there's a 2-week lead time between initial inquiry and drawdown. So if that's typical, then that doesn't seem so bad. So I've got a couple of final thoughts, really. The CBI are pushing for the 80% guarantee to be uplifted to 100%. Now you think, well, what difference would that make, really? But it's crucial because if there's no risk to the bank, then they don't have to carry out necessarily risk assessments. And all the paperwork and the red tape to actually get these things agreed goes right down. So hopefully we'll see that as a development, but as I say, it's not in yet. But I would finish really by saying, you know, the real kind of businesses that are suffering in my mind at the moment are the small companies with direct to shareholders, where, you know, it's the low salary, high dividend sort of typical remuneration. They don't really fit into the employment aspects of the JRS, although directors can be furloughed because their salary is too small. Equally, they're not self-employed, so they can't get that. So what I'm saying is that it could be, unless they qualify for their business rates grants, the CBILS, the loan finance, could be the only real source of finance that they can actually achieve in this period. So it is vital. And I think businesses should sort of pay more attention to it, talk to their accountant and talk to their bank. So that's, hopefully I've answered a few questions. If you've got any more questions, obviously please funnel them through and David will sort of chair that. But that's enough from me. Most of the questions, over 75%, I think, were for the job retention scheme. My Exeter colleague, my esteemed Exeter colleague, Chris, will talk you through the developments on the JRS. Chris, over to you.
Patrick, thank you. I'll just enlighten everyone of the technical issues that we had just before we started, trying to work from home. I had to go and tell my daughter to stop watching Netflix and my son to stop downloading a game on his PS4, or else you wouldn't be able to see or hear me. But there we are. That's the time. Those are the times that we're in. So yeah, the job retention scheme launched 4 weeks ago today by the Chancellor as one of the flagship schemes to help businesses bridge this difficult time, where, you know, a lot of businesses, their income has gone off a cliff, and you know, this is very much in place as a short-term measure to try and keep as many people as possible in workplace, albeit perhaps not working, and sort of in a position ready to go again. You know, when businesses start to slowly open properly again. Today, the focus really isn't so much around the battle and the issues we've had over the past 3 or 4 weeks to do with sort of the technicalities of furloughing of staff and things like that. I do appreciate that, again, quite a lot of questions in terms of the job retention scheme, and quite a lot of them are in connection with that side of things. You know, there are still very much grey areas over, in particular, things like holiday pay and how that interacts with the furlough period and the payments made during the furlough period. The bottom line is we do not know the answer at the moment. You know, various legal people have views on this. The Treasury and the HMRC have been noticeably quiet on this matter, and people really, you know, do need the guidance from somewhere on that. So today the focus really is on the impending going live of the HMRC portal, where businesses can start to make their claims for the funding from the government in respect of wages that they've perhaps already paid, perhaps in connection with staff who've been furloughed during March, the latter end of March and into April, and obviously then on into the coming weeks. I've got to say I'm a little nervous at the moment. Obviously, we knew this was coming up, this webinar this afternoon. I've been checking all week, waiting for the much promised further guidance from HMRC on the making of claims, and we've heard nothing yet. it does make me a little nervous as to quite what the position is going to be on Monday in terms of the ability to start making those claims. But we'll have to see perhaps what the weekend brings, a bit of light reading for the weekend for us all if that does land. So really, the message today is, as best we can with the information that we do have to hand, it's about getting prepared, getting yourselves in a position to be able to make those claims as quickly and as efficiently as possible. Putting aside the various questions that we all have in terms of some of the specifics of how these claims are put together, there are certain things that we can all look to get in place to help on that. So sort of some of the key things: you're going to need your pay-as-you-earn reference number. You're going to need to provide details of the number of employees that you have furloughed. You're going to need details, obviously, of their names and the national insurance numbers of those staff. If you operate your business either as a sole trader or as a partnership, you're going to need your UTR, your unique taxpayer reference. Or if you are a company, you'll need your corporation tax UTR, or your company registration number apparently will also suffice for those purposes. You need to set out what the period of your claim is going to be, sort of the start date and the end date. You need to come up with the amount that you are claiming on an employee by employee basis. So there's going to be some number crunching required. You need your bank account details, the account number and the sort code, and contact details, a name and a phone number. Were HMRC to have any questions and they need to contact you, they need that information as well. What is essential, if you are going to be dealing with your own claims, you make sure that you have and you have got access to your government gateway, so you're going to need your ID and your password. And you also need to make sure that you have registered with HMRC for pay-as-you-earn online to sort of access your business's pay-as-you-earn account. Now, I believe they have relaxed the restrictions around that. Previously, when you went through that process, you would have got a sort of an activation code through the post. That procedure, that check, seems to have been removed from sort of reading what's going on at the moment. So there are attempts in place to try and streamline this process. If Thomas Westcott deal with your payroll, and we're registered as your agent for pay-as-you-earn matters, we can process these claims for you through our own access to HMRC. Even if you do use us for your payroll, you are perfectly at liberty to still submit your own claims if that is the way you want to do it. I'm saying that, and I'm just being totally honest and conscious on this. We operate some sort of 1,300 payrolls for people. There's going to be a lot of work involved. So it's a team effort, and if you want to go down that route, we won't be discouraging you. But again, you just need to make sure you've got the access details that I've just referred to be able to do that. As I alluded to, this isn't a case of sort of just throwing a lot of information at the revenue and expecting them to calculate this for you. It's almost very much like doing your tax return, sort of self-assessment. You do your own tax return, the revenue accept your figures, and then they can check it afterwards. It's pretty much the same principle for this. So the onus is on you as the employers to do the calculations based on the guidance that we, as of yet, haven't seen the detail of. But again, basic principles are, you're going to have a starting point. You're going to have a sort of a reference pay, a reference salary in connection with each of your employees. Now, that if it's simple, sort of same salary every month, that probably is going to be the February salary is going to be a starting point. If people are variable in terms of what they get either weekly or monthly because of sort of overtime or things like that, or indeed even the hours they work, you're then looking at sort of the averaging. What's the average that person has received during the 19-20 tax year, which we've just come to the end of. Or you also have the option, or you should be looking at the same pay period last year and compare the two. You know, is the average for the year higher or lower than the same period last year? You take the higher and you use that in your calculations. That's going to be capped at £2,500 a month. The government will pay 80% of the pay, so capped at £2,500. But on top of that, the government are also going to be funding the employer's national insurance and also the employer's minimum auto-enrolment pension contribution, which is 3% above a certain level of earnings. So again, those will need to be built into the calculations that you do. As I said, you know, the intention is there should be online guidance on how to do this. We haven't seen it yet. And I'll sort of come on to the reason for that in a minute as well, because the Revenue have been putting out another very strong message on all of this. Again, you sort of hope when you look and you think about it, you hope there are going to be examples in there. You know, that's the sort of level of detail people are wanting. You know, this is my situation. How do I calculate this? Because I know one or two of the questions are on some of the specifics like this. It's good to see that people are thinking about it. You know, for example, in March, part of the month will have been normal, and part of the month will have been furlough pay for some people. How do you calculate the national insurance and the pension element of your furlough pay for part of a month? It's not, your employer's national insurance isn't 13.8% of a figure. It's 13.8% of a figure above a certain amount per pay period. So there's little nuances in the calculations like that. And another issue that I've seen doing the rounds the last couple of days is also how do you factor in things like the employment allowance, which is the sort of the government contribution to the employer's national insurance. How is that going to be factored into any calculations, if it is going to be factored in? Again, these are just things we don't know the answer to as of yet. Couple of points, further points to note. You can only make one claim every 3 weeks. But think about it, again, if you're running a weekly payroll, it would be nice possibly to be able to make a claim every week as you're paying people. You can't do that. It's one claim every 3 weeks. So for example, if you do get to make a claim on Monday, I'll just briefly touch in a minute on what you can cover in that. The next claim you can make will be on the 11th of May, just for example, or after that date, obviously. So it's a minimum of 3 weeks. You can also claim up to 14 days before a particular pay date in respect of that pay date. We're led to believe, again, I've not seen that in writing in any official HMRC guidance. It is what the head of HMRC said to a parliamentary committee a couple of weeks ago. So again, there will be, the anticipation will be that on Monday, you should be able to, if you pay people, so let's say, for example, at the end of each month, monthly salary run, on Monday, you should be able to make a claim for your March salaries or your March furloughed salaries. And also in respect of your April salaries that you're probably going to be paying next week or possibly the week after. So again, that would be very useful, I think, just from a practical point of view for businesses to get that money in the bank to help cover those wages as soon as possible. In terms of the actual payments, refer to the fact that the Revenue are wanting bank details. They're going to be making these payments using BACS. And they have indicated that the first monies should be paid within 6 working days of a submitted claim being successful. That probably means it won't be six days from Monday if you're successfully making a claim on Monday. But you know, you're probably looking middle to late the following week. You know, where you to get to make a claim on Monday. And again, they've indicated that on a subsequent claim, let's say you did the same thing again in May, in respect of your May furloughed staff costs. Again, they're talking 4 to 6 days, within 4 to 6 days of submission of the claim. In terms of the actual system they're going to be using, I don't know a lot about it. It's been created from scratch in the last 4 weeks. I haven't seen it yet. I don't know anyone that has seen it yet. This is where my nervousness creeps in a little bit, and I'm wondering why it's gone quite quiet on this, as to whether it's not working as it should. The revenue don't have a great track record of being able to deliver robust systems that can cope with high demand. We've been assured that it has been beta tested. We've been assured that it can handle 450,000 users an hour. We'll just have to wait and see whether those claims are credible or not. To quote HMRC, they say the service should be simple to use. I really hope it is. One of the messages that's been coming through loud and clear to us at Thomas Westcott as accountants, as agents in respect of payroll clients, is that HMRC really don't want people to be phoning them up in connection with their claim. The bottom line is, if there's 1 million, 2 million businesses trying to contact them on the phone, they will be swamped. They are badging this as a self-serve system. Again, self-serve, you hope it's going to be simple. There should be online help available in terms of the detailed instructions on how to make the claims. They're encouraging people to use web chat wherever possible to if they've got any questions. And they've actually been quite open to us as agents. There's been a couple of communications in the last week where they really want to encourage us to get involved in helping our clients as a means of delivering this. They really see people contacting HMRC itself as the absolute last resort. For people who run payrolls and perhaps there's less than 100 people on the payroll, you could have a bit of work to do. If you've only got 4 or 5 members of staff, putting that information into the system, which you will have to do sort of manually, won't be too onerous. If you've got 95 members of staff, that's going to take some time. For larger employers who perhaps got over 100 employees, you do then have the option to be able to upload the data in Excel or CSV format, which should cut down on the time. Housekeeping point, do whatever you do, retain all documentation in connection with furloughing. Now, this even goes back to the start of the process, the furloughing of staff, making sure that process and that agreement from staff to be furloughed and the date from which they are furloughed is in writing. You are required to keep that for 5 years. Following on from that, then, in terms of the calculations, you do need to keep those calculations in terms of how you've arrived at that base salary or base wage that you're going to use for your calculations. You then need the calculations of the national insurance and pension that you're reclaiming. I'm sure that there will be sort of checks and measures built into the portal at a basic level to sort of check claims that are submitted. But HMRC, again, have been very clear. They're not going to do it now, but they will be undertaking audits of claims that are submitted at a later date. So it's imperative that this supporting information is retained at all costs. So, after all that, what would be my key tips for a successful claim? First of all, I would say be patient. I think Monday is going to be a massive test for the system, if indeed it is up and running on Monday. If you can defer making a claim, I would do, or consider perhaps doing it in the middle of the night. It will be a bit quieter. Get prepared, be prepared. A lot to take in, but the information in terms of what you need is on the HMRC gov.uk website and indeed on our own help sheet on the job retention scheme. And above all, ask for help. If it's not clear, you don't understand, ask for help. Ask your usual Thomas Westcott contacts and see what assistance they can be. That's me finished, so I think back to you, David.
Great. Okay, thank you so much, both Patrick and Chris, for your insights on that. We haven't had loads of questions, which is good. I think that means that you've kind of covered the bases and answered most of the questions that people had prior to this. We do have a question that came in quite early on from Brian Sherwin, which is about a specific business in North Devon. He said that they are retail shop fitters and also make climbing walls for the leisure industry. Their premise has a rateable value over 15,000, so they're not eligible for the £10,000 grant. Because they're not in retail, leisure or catering, they don't qualify for the £25,000 grant. So they've had to furlough all of their customer premises, all of their customers, because all of their customer premises are closed, so they no longer have access to their suppliers. Is there a way they can qualify for the grant? Patrick, can you turn your microphone? Oh, hold on.
That's it.
Okay.
The trouble is that by nature, the rules are black and white. The chocolate manufacturer that I was talking about in my piece is in the same position, because although he sells, he manufactures what's a very nice product, because he doesn't actually sell it to, it's not classed as a retail business, he doesn't get anything either. And I think this chap's in that situation. So you're sort of one step removed from the retail kind of sector. My advice to him is to actually sort of see if he can get one of these CBILS loans. If the business was good before and should be good after, then that's what it's there for. So that would be my advice to him. But yeah, it sounds as though he's stuck on the business rates grants, but unfortunately, that's they had to draw the line somewhere. I think we had a marina, didn't we, Chris, that didn't qualify either.
They were wondering whether they were classed as leisure. It's a tenuous link, but like you say, it is pretty black and white. A lot of these schemes the schemes have been put in place very quickly. They're quite blunt instruments to try and get as much money out as quickly as possible to as many people as possible. So sort of all this fine tuning, unfortunately, there are people around the edges who miss out.
Okay. Another quick question from Andrew Southall, who said, do you see CBILS being applied to micro and startup businesses? And do you see the banks taking equity stakes in small and micro businesses?
I would say no and no on that. I think the idea of CBILS is to, it's more for established businesses that have a track record of profitability. And this is what the banks will be looking at when they go forward with it. It would be very difficult for startups to, obviously, by their very nature, to establish anything like that. It's not to say they can't access it, I think, but it's the odds are against it. But I can't see the banks taking an equity stake in businesses. They're not. It's difficult enough for the government to get them to play ball as it is. So to go these extra steps, I think would be too far for them.
Can I pick up on, there's a theme to a number of the questions that have come through on the job retention scheme. Not specifically in terms of what I've just been talking about in terms of the mechanics of the claim, but I think it's probably worth just covering off, because it does sort of cover 3 or 4 of the questions that we had beforehand. I think it's pretty well known that there's been a change to the job retention scheme this week in terms of the eligibility of employees, whether you can include them in the job retention scheme or not. And initially, there was a cut-off date of the 28th of February. They had to be on your payroll at the 28th of February to qualify. And it was a bit vague. But obviously, there were a lot of people who perhaps moved jobs in early March who it didn't apply to. Now, earlier on this week, there was an announcement by the Chancellor that this was being extended or changed so that the cut-off date would now be the 19th of March, which on paper sounds like it's helping. Unfortunately, the announcement also included a further clarification of what being on the payroll meant. And to be on the payroll now means that you, as the employer, as a new employer, must have made an RTI submission to HMRC on or before the 19th of March as well. Now, the RTI is what you submit to the revenue once you've run your payroll. So putting that practically, you know, if someone starts for you on the 1st of March and you're on a monthly salary and they get paid at the end of the month, the chances are your RTI was submitted after the 19th in respect of that person. So they still wouldn't qualify under the job retention scheme. If someone was on a weekly pay, and they started the 1st of March, the chances are you have submitted an RTI before the 19th of March, so they would qualify. The figure I mentioned that, you know, it would help an extra 200 people. I'm very dubious about that, because I think it still doesn't help an awful lot of people who have moved jobs in early March.
Okay, great. So yeah, I mean, like I say, just looking through the questions, that sort of covers a few of them. If that's answered your question and you've asked a question in the questions there, maybe you could just say thanks very much there, so I can move on from those ones. Another comment, just where did I see this? Hold on a second. Yeah, it was a useful, more of a comment than a question really, from Clive Chilcott about the part-worked furlough months that have been talked about. Apparently Xero have just updated their software so you can do part furlough payments, so maybe that helps some of those people. We had a question earlier on from Sue just about payroll bureau. We use that. Can we still register online? Is there any information or insight on that? Do you know?
Yeah, you've got to be a little careful, because a payroll bureau as such may not actually have pay as you an agent access. It certainly doesn't stop you as the employer also registering online, which I alluded to already. To get your, you know, through your own government gateway, you can access pay as you earn online, and that will then enable you to submit the claim yourself.
Okay, great. Okay, so I think we've answered that one. So I think, I mean, we've got a couple more questions here that we'll try and answer really quickly, and then, I mean, they do cover maybe some of the things that have already been spoken about. And then any further questions after this, I mean, if there's an email address which you can use, which you can email through any further questions, and the team will endeavour to answer you. So that email address is events, EVENTS, @thomaswestcott.co.uk. If you can address any of your further inquiries to there, then that email will get sent through to the right person and they'll be able to answer you. So just quickly, we had one more question. So I have a member of staff recently returned from maternity leave. She would normally now be receiving a higher wage than last year. Am I right to assume that she just loses out here? It's from Alex Foley.
I'd have to check on that.
Okay. Well, maybe that's one that you could send through.
Yeah. I mean, on that, I mean, obviously we have already got a lot of questions come through before we started today. You know, we are going to work through the, appreciate, you know, we haven't answered anywhere near all of them. We will work through them, and so if some that we think we've answered, we'll leave it at that, but we will be coming back to others where we haven't had the chance to sort of deal with their specific query. Okay. Well, yeah, looking at a couple of the other questions there, they're quite specific. So maybe if we haven't answered your question today, you could send them through to that email address, and the team can do their best to do that. So I think for now, it just remains for me to thank both Chris and Patrick for coming along. There'll be more of these, I guess. I think Jamie's been quite interested in how well they've gone. Jamie's very keen to get these going on a regular basis, yes. Yeah, so I think watch your inbox. There'll be more information coming through about any further webinars in the future. For now, thank you both very much for contributing, and thank you for your questions, and we'll see you on the next one. So, and enjoy your weekend as best you can.